What is up, guys? I'm Joe Von Grichton, and welcome to Pippin and Dippin Academy's YouTube channel. We got Hunter, the Bang, Pip Hunter, Burkett.
Yeah, I know they're bad, guys. I know they're bad.
I better not say that. We might have some copyright problems or something. Welcome to our channel. Hey, before we get started, guys, if you're a first-time visitor, welcome. And secondly, hit the subscribe button. It's in one of these corners. Sorry, my hands are real fast. I'm like a ninja today. I haven't even had a bang. Anyways, it's in one of those corners. Hit the subscribe so you get notified anytime we post a new video or we do a new live. Secondly, if you subscribe, put it in the comments, I subscribed, so we can say hello. If you have any questions or comments, please leave those there as well. And of course, if you love the video, which I guarantee you will love this video. If you love the video, pound the like button so we can help other traders just like you, whether you're new, experienced, whatever the case may be. I guarantee you there's value in what we have to offer today because it is simple. Last video, we talked about the only 5 things you need to know. We're going to show you those in action today, and it actually show you how you can master high probability intraday setups, trading setups. So what do I mean by that is that we're not looking to hold trades for like 2 and 3 and 4 days, or sometimes people hold a trade for a whole month. We don't do that. Not that you can't. Our strategy works that way. You just have to trade on the higher time frames, be really patient. Hunter and I, obviously, he drinks bangs. I'm from California. We're not very patient. We like our pips today. And so we trade intraday, meaning we trade on the lower. We get our information from the higher time frames, drop the lower time frames, and trade accordingly. So without further ado, I'm going to hand it over to my main man, Hunter. Let him walk you through some setups here. I think you got 3 for him today, right?
Yeah. Actually, all 3 trades that we took.
Right.
And so, guys, I want to piggyback real quick before we get started. Joe and I just started a brand new free Telegram channel. Okay.
Yep.
Go and get inside that thing. Joe and I are going to be dropping results. We're going to be dropping charts. We're going to be dropping maybe in the future some signals. We're not sure about that yet. We know our feelings about signals.
And it's in the description too.
Yeah, in the description. Yeah, it's the links in the description. We're going to be dropping. You guys, we will be using some marketing inside of there because we are very passionate about Pippin and Dippin, our community, and how it helps people, right? So, and you're about to see that right now. There was 3 students on this morning, and they reaped the benefits of live trading. Not everybody can hop on live trading because we know you guys still have jobs and things like that, but we do have that there for someone that can hop on and benefit from, right? So go and check that out. Subscribe to the Telegram channel. Let's get started.
Yeah.
Share my screen. Boom. Can you see my screen, Joe?
Yeah, it's loading right now. Perfect.
Cool deal. You guys should see a more clear vision of my screen now.
It is gorgeous, man.
You should be able to hear me better. I know we did have some comments in the last video of my audio. Guys, I'm in a brand new house. I had a laptop that was only at i3. I've been using it for a long time, and I was running so many programs on it, bogging it down. Okay. And our internet where we are now is not that great. So I upgraded to a gaming computer so I can have the best speed. So now you won't have no issue with that. So I fixed that for you guys. So now let's dive in. I want to dive into the trade that we took this morning. Okay. Which was GU. Okay. We took a buy right here coming off of there. I know you're like, Hunter, why'd you counter, bro? You talk about no counter in your videos. There, like I talk about, there's a place and time to count. Okay. So as I've seen on the daily time frame, guys, we have been dropping significantly, right? And there's a lot of imbalance above us. Okay. There's imbalance above us. And I know that we need to go back there and fill that. Okay. So if I go to the weekly time frame, you see that I have a little order block drawn up right here. We pinged it, we reacted. As I've told you, never try to predict the market, always react. You can put these zones all you want. Once they get to that area, you need to start looking at, okay, take your trading plan and stick it on that trade and see if that is present. If it's present, take the trade, right? Now, there is a level below me. Could it go down and go to that level? Absolutely. I just seen my trade set up. I seen the manipulation in the market this morning, and we took it. Okay. So as you can see, I'll break down to the 1 hour time frame. I know. Let's see. Let me zoom in a little bit on the 1 hour. Okay. Now, yesterday, you can see, well, all during this week, you can see that was a bunch of accumulation. Okay, nothing but moving back and forth, back and forth, back and forth, back and forth for almost a week, right? So we busted through that. It was like, woof. Okay, we busted through that and took what? More liquidity. Okay, and then we get back into the same concept of over 2 days. The reason why you want to, guys, never trade, and I'm going to show you on an intraday scale, never trade inside of this. Okay, that's how you're going to get caught. That's how you're going to get caught. They want you to be inside of here, right? Always trade on the outside, right? So if you see a good stop hunt of liquidity grab, shark fin, okay, sell it. Same thing. Just do your due diligence on, remember what I told you about the market direction, finding order flow, finding your liquidity zones. Where is your market going as far as direction to figure out where's liquidity laying on the bigger time frame. Okay. So as I seen, we accumulated some more. Okay. Boom, boom, boom. We made a low in London from yesterday. We come right here. We come back to that same low. We come up. London comes back to that same low. What is that doing, guys? That is creating liquidity at that area. People are buying, thinking this is the holy grail trade and we're about to go. This is the reason why I teach to trade one session. If it's London or if it's New York, trade one session and that's it, right? Because you're leaving less room for error. When you're trading both, you can have 2 sessions of nothing but losses, and then you're scratching your head. What do I do now, right? Or if you're an equipped trader, I'm not saying it can't be done. If you're an equipped trader and you've got some time under your belt, you can trade those sessions, because you could, maybe take an L in London and come back and gain, multiple your loss back end, right? But you need to do your due diligence on, getting some time under your belt and understanding how price moves. So what I did, okay, is I seen that it made the low again. I was like, okay, as I was right here, I was telling our students, is like, there's a bunch of liquidity here, guys. Let's wait for the liquidity grab. Okay. And what did it do? Boom, spiked, hit. I draw a line on this wick, and I wanted to trade away from this. Okay. And I wanted to go attack what? I want to go attack liquidity. It left liquidity before it left here. Okay. People are selling here. Okay. As you can tell, there's liquidity on both ends. Remember what I told you about the previous accumulation. I want to trade on the outside. I don't want to trade inside. Okay. So let's break down to 15. You can see that we moved down to London, or right out of London, comes up, moves down, right. This was equity hour. Okay. Boom, smokes, goes down, takes this low out, takes out previous liquidity, and sets the pattern. So what do? We break down to the 5 minute. Okay. A little bit more good price action. We're starting to make a double bottom here after the liquidity grab. We're good. We go to the 1 minute time frame, guys. And as we make the left leg come up, make a right leg, we pull back in immediately, give this nice little wick right. We close above the 13, we get in. Okay. We did weather some drawdown, 7 pips of drawdown, nothing. Stop losses back here. Okay. We break back up. Okay. You can see this nice little volume candle. We close back above, we break this high. Okay. We pull back in, we grabbed a couple more entries. Okay. And we start to move away. As we start to break highs, guys, the confidence level goes to the roof. Okay. Now, when you're watching the 1 minute time frame, you can really dissect. How price is moving. Start to look at price. I'm not saying watch this chart over time, but you can see that it's leaving imbalance in here as it's moving up. And you have to know that price will come back and feel that. It might not do it right then, as in this case it did. And look how it did. It come back, filled the imbalance, made another W pattern, and left. Guys, when that happened, broke this high, break even, let the trade go. Let the trade go, walk away from your computer, and do what? Okay, you set your take profit. We had our take profit set here, okay, at this high. So you can see right here, this was buy side liquidity, okay? And as you can see, that it took it. And now look how prices react into this area right now. Guys, when breakout traders seen this, they see, okay, we just broke the high, let's retest. They got the retest, and boom. Watch how price goes back in, comes and maybe feels some imbalance. Let's go back to the one. Or could potentially come back to this order block that it left here as it made an explosive move here. It could come back here, retest, and then go. But in that meantime, look how it's reacting. In that meantime, it's going to take those guys out. Okay, that's what it's designed to do, guys. These markets move off out, and that's what how it's built. Okay, so that was a perfect trade setup in intraday. So you're thinking your entry was here, multiple entry here. Okay, you had a 15 pip stop loss. Okay, for a what? At the high. This is a 60 pip move, guys.
4 to 1, baby.
4 to 1 trade in intraday. You got to think about it. I talk about this all the time. Guys, if you're scoring 60 pips on a trade, on a pair that moves a little bit over 100 right now, in a day, you're winning. Walk away. See what I'm saying? Walk away. Guys, 60 pips on a funded FTMO. Like you can see my server right now. I'm running an FTMO right now. Okay. Is pretty good money. You know what I'm saying? If you're running a $50,000 or $100,000 challenge, guys, you're really paying, think about it. You're paying $300 something, $500 something to get a big account. You're risking that amount of money to get a big account. If you're dotting your I's, crossing your T's, you'll pass these things and you're getting funded for paying a little bit of money. And then if you do pass, you get the money back. So it makes sense, right? So that was the trade we took this morning. And then I want to show you this guys is a great trade, but it's not as pretty as the other ones that I'm about to show you. It's just not. Okay. We took a trade on USD CAD on the 11th or the 10th, I'm sorry. Okay. And this was, guys, this is when you really need to be patient. Okay. So I want to go to the daily perspective here. You can see that this level here, okay, when we busted this level was no longer relevant to me. Okay. When we did pull back in, I did catch a trade back in here, but we moved away and we kept going. So we went after this high. Okay. So this high wasn't relevant to me anymore. When we took this, I started to think, okay, baby, we fixing to react here. We're fixing to react. If it's a pull back in, catch some traders, do some manipulation. Okay. So what I did on the 15-minute time frame, okay, on the 11th of May, okay, as we were making that high, we set a high and moved away. Okay, we started to break down. We broke this low. Okay, we broke this low, and I understand that. I understood that. News came out. I don't trade before news. Okay, I want the news to happen, and then I'll make my decision on if I'm going to take a trade or not. So I want you to understand there was buy side liquidity right here at the top of Asian. Okay, I don't need to put the text in here. You guys know what I'm talking about. When this trade is explosively took and went to the Asian high and took out this high, okay, and pulled back in, I was like, here we go, guys. This is good. There's multiple confirmations here. Liquidity grab, shark fin. Y'all see it? I talk about it all the time. We'll scale down. Let's get a better entry. Okay. Boom. We can go even lower to get the the perfect looking M pattern. Okay. Let's go lower. Guys, it's the same thing. Just because it's the 1 minute doesn't mean anything. Okay, it's the same thing. Look at the imbalance right here. Okay. Look at the imbalance that it left. All of that imbalance right here. I understood that the price wanted to come back down here and fill this. Okay. So boom, explosive move, take liquidity, buy side liquidity, left leg comes down. There's already people selling. They take them out. That's why you wait for the second leg. Okay, we break down. There's the entry right there. Boom. 10 pip stop loss. Wham. Another 60 pip move. You could have done filled the gap, took your profit, or you could have done what? Went all the way down to these relative equal lows right here, sell side liquidity, and took it. Look how it smashed it. Look how this candle performed a really big candle and smashed it. Right? If anybody was breaking even right here, trying to get their way out of it, they smashed it. I smashed it. Okay. So didn't give anybody a free lunch right here if you were on the wrong side. So that's what I'm talking about, guys. It's simple. Like even with the entry of the trade, you understand what to look for when it comes to liquidity and where the imbalance is. Guys, if you have a liquidity grab with a shark fin and you have an imbalance below you or above you, vice versa, which direction you're going, it's an A-grade trade. That's a high probability intraday setup. And you master these. Guys, this trade setup, you should go back, and I don't know if you can or not. We'll see. But you should go back, mark this up, and screenshot it and put it in my perfect trade setups. And guys, these will perform. Okay. So there is right here, out of the band, into the band. There's divergence right there. Boom, left leg. You can see that the right leg come higher. Okay. We were overbought. Everything met requirements to take this trade. If you only wait for these bad boys right here, you're going to win in this market because you're going with them, right? You're going with the market makers, which is an algorithm. So we'll go to SPX. I want to show you a trade that I took this morning that was wonderful. Okay. But I want to show you high probability. This was a little bit more of a risky trade, just due to the fact of the way that the bigger time frame looked, because it could have easily stopped right here and just kept going down. But I'll show you why I took it. Okay. But I want to show you this one, high probability with the direction of the trend. This is high probability. So you can see that Asian has here. Okay. Asian's here. We broke above. Okay. Now, this is the reason why I say that the reason why I only trade is because of this right here. This setup right here. The reason why is because I understand what Asian gave me and I understand what London done. So now I can make a decision on what I want to do in the last session. Because at the end of the New York, that they go right into accumulation, right? Most of the time. And then they accumulate and then do the same thing over and over, right? So I understood that London had what? Buy side liquidity, right? We busted above Asian. That's cool. My market direction's down. Okay. I seen that we have buy side liquidity. I seen we started to drop down. You can already know that people, because this right here is bedtime, guys. This is where they catch you too, in between these two sessions. So they started selling, right? Boom. Fast move up, grab them, set the pattern. Okay. You got liquidity. One. Almost a shark fin, 5-minute shark fin for sure. Okay. There's the end pattern. 15-minute shark fin, it was almost touching it. Grabs liquidity, comes up, makes a left leg. That pin pulls back in quickly. Okay. Pulls back in quickly, hits the previous day high right there, or the last high. Comes back in quickly, starts moving the price down quickly. Okay. Left leg comes back up. It doesn't need to come back and grab this high. It's already grabbed enough. That's why you see it stop. Okay. Goes back in, makes the net, comes back in. That's how you know that you're ready to go in the second leg, was when that entry candle is a nice volume candle, right? And it closes below the 13. And you can really see that if you drop down to the 1 minute, there's probably a lot of price action. You've got a bearish engulfing here. I'm sure there's more bearish engulfings, pin hammers, reverse pin hammers right here, ready to, as of candlesticks, reversal candlesticks, morning stars, evening stars, and things like that on the 1 minute time frame. That's just extra confirmation that you can use to put inside your trade, right? I just know pattern, and I know patterns work, right? So once it closes below the 13, that good candle is probably over a 10 pip candle. I mean, not 10 pip, but 100 pip candle when it comes to SPX, right? And it comes back, we get our entry, we set our stop loss, and then go, okay? Then what am I chasing? Chasing liquidity, right? Bottom of Asia is resting liquidity, because you got to think about it. There's buyers right here. You got to think about there's liquidity here, okay? We go and grab it, our entry, set our stop loss, 150 pips, and goes and grabs 743 pips, okay? I know that says 7,726, but that's in the points, okay? So that right there, guys, is a high probability setup. And what else do you have, right? You got liquidity, like I was just talking about, resting right here. Resting right here. You could have took off money right here. Say, all right, you can see how this wick reacted to it. Grabs it, pulls back in, right? And then it smashes right through. You could take off some of your trade right here, 25%, 50%, let the rest ride, and then go after this. You're done broke even. Guys, you got to think about it. When I'm showing you this trade, okay? When I'm showing you this trade and you're watching this price drop, okay? This is the left leg. When you're watching price drop, okay, and you're seeing candles paint, and it's closing below 13, and it's giving you some candles that have imbalance. Once that gets filled, guys, and your entry is above that, and it starts moving away from you, guys, you can break even immediately. Once the imbalance is filled, because there's no reason for this to come back. There's no reason. There's no reason for this price to come back. Just don't fill everything we're working down. So you can get down on the micro time frame, which is 1 minute, and really define on if this price is just to move away quickly. And it's already like this candle here. If my entry was below here, okay, and I seen the imbalance being there, and then you come back and fill it. Once it filled it and it started moving away, maybe broke this low, I'm done. I'm breaking even. I'm letting the trade break even and go. You know, that's just me. I have multiple, ways of doing it, of breaking even. If I'm at a 1-to-1, I'm breaking even. If this is a more of an advanced type of way of breaking even, because you understand the price movement, you understand that what it's doing. Okay, you understand that if it feels it, it's not coming back. Right? It's going to move away from you. You can see here.
And show them what time it is too, Hunter. Like what time it happens to be too, because like talking about like how the 1 hour candle, how it's in the patterns, how it's going to run for, it's going to do that for an hour on the lower time frames. That's another reason why it's so powerful.
Yeah.
Like right there, it's at 7 o'clock.
Yeah. So like right here, you can see how when the hour closed right there. Okay, so the hour closed right here. You can see how when it opened back up, that was another, let's say another 15-minute candle opening back up to go. So you got here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So guys, when you're entering on a trade that's before the actual hour close, which I'm saying, so let's just say this is 1700 down here. Okay, on Hugo, this is FT time. So if you're entering on 1700 or before 1700, you could be potentially getting caught in the steal of them going to grab liquidity, fake traders out, because you're not getting on after the hour close and getting on the real move. Which I know that's a little foreign to you when it comes to advanced stuff, but like this is still a second leg. Right? Still a second leg. You're entering after the hours have closed. You're entering on that next 15-minute candle open right here. When it closed below the 13, you're setting your stop loss and go. Right? Two, guys, with SPX, if you're trading indices, SPX, NAS, you need to be aware of equity hour. Okay. 8:30, it's 8:30 my time, which is central time. Okay, so do that with your time. If you're Eastern or on the West Coast, do that every time. So it's 8:30 Central my time. So I understand that there could be potentially another liquidity grab, spike, anything at that hour. That's when the stock market opens up. And you guys know that these are, NAS 100 is the top 100 companies in the world. So, you know that right there, when the stock market opens up, that affects it. You can see it. So, so with that, that's what I'm talking about. High probability setups is these, waiting for these and understanding liquidity, understanding the pattern, understanding timing, understanding all of it. No, and doing your directional bias at the top. That's what I was talking about. There's only 5 things you need to know from the previous video if you didn't catch that. Those things, those 5 things are important. Okay. And that's all you need to know, guys. Like this, like I could take all the EMAs are just a cherry on top. I've always traded with EMAs ever since I started trading market maker and smart money concepts. And it just helps. Okay. That's just me. If you don't need them, take them off. You need this. Okay. I know Asian doesn't start here. I just put that there because potentially it's so small movement. It doesn't really matter. I know after that, Asian's going to come make it low because you can tell when Asian opens up. I just put that there, let the box come all the way to when the market opens, closes and reopens, is because I know that's no training time for Hunter. Okay. And I know this is making a higher level. It's worked for me. Okay. So if you want to put your box, Asian box, where Asian actually starts, which is 7 o'clock my time. 7 o'clock my time, Central time, is when Asian starts, my time. So, with that, guys, I want to show you one more trade, and then we'll end the call. But I want to show you a trade that I took on SPX today. Okay, I've seen. Let me go to the daily time frame. Okay, you can see that across here, right here at this area right here, you got to understand there's so much areas. I got this a relative equal low right here, knowing that potential price can come there, right, on SPX. Okay, but I can see that there's also little pullbacks, okay, where they left order blocks in this movement up. Okay, you can all see them. These fast movement ups, after it leaves a bearish candle and then fast movement up, last bearish candle for a fast movement up, they're order blocks. So they're potentially coming back to that area. You can see this one here. Okay, so when it rejected that area of that order block, I started to pay attention to it. Okay, and then you can see, let me go to 4 hour quick. Okay, once we're moving down and we started to see bullish movement, I started to wonder on it. I was like, okay, so we set a low. We broke that high that set right here of New York yesterday. Okay, it broke that high during Asian, and we got on top of yesterday's high and we started resting. Okay, so I was like, okay, is this a 100%, 90% trade for 100? No, it's not. Those ones I just showed you are. Them are no-brainer trades. Okay, so I want to break it down to what I've seen. Okay, I wanted you to pay attention to this here. Okay, so boom. I want you to understand this is equity hour too. Okay, we run down, grab liquidity. You can see it here. Here's another relative equal low that I was looking at. I was like, okay, there's here, there's here. It pinged and it pulled back in immediately. Okay, I was like, okay, that was the liquidity grab. And now I'm going after what? I'm going to go after this relative equal high. Because even if this market did drop back down, guys, and made an impact, it started to move back down in the direction where it's heading. Okay. I know that we're above the EMAs. Our market is shifting. Okay. We set up peak formation low. So I am technically in the right direction as of right now. But this market could shift and keep moving down. It's just having a creepy pullback to grab, the buy side liquidity that it's made up here. That's in the previous drops. It could be going back to an order block on the higher time frame up here. it could be going back to here just to grab this and then move back down. Okay. So I was on the 5 minutes, seen that. I dropped down to the 1. I was like, okay, here we go. So so we had our low here. We come up, boom, smack down. We pull back in really quickly. I'm like, okay, I love this. We got divergence on the TDI. Okay, from here to there. Boom. It closes above the 13. I wait a little bit. I was like, it could come back down here and make another low. So I waited for just a little bit. I see this spike down close. I was like, okay, that's bullish price movement. I was like, okay, cool. So we close above 13 again. I wait for the entry. I get the pullback entry. I start going. I'll weather a little bit of drawdown. Okay, not much. And then she takes off. Smashes my take profit immediately. Okay, I've got my stop loss below this wick here. A little 86 pip stop loss. And I grabbed like 155, 160 something pips. I can't remember. I'm just showing you, you know, to the high. But good 2-to-1 trade. Scalp. I didn't take it all the way up to the high. I did have a line here at one time. Right here. I was like, it's probably going to go that high, guys, because it's relative equal highs right here. But that's what I'm chasing, guys. And that's what I chased in the lower time frame. And got me a quick 2-to-1 scalp, and I'm out. Okay. That's what you need to focus on, guys, is trading. Stop trying to trade every trade. Trade outside the box. So, guys, if you're inside your day and price is just moving the inside of Asian, stay away. Stay away. That's what them boxes are for. Okay. If you do not have this indicator, it's free. It's free. I'm not going to not give it to you because it's free. You can get it anywhere. You can get it from me. You can get it from Joe. It's free. It's free out there. You can get this as actually part of Steve Morrow's, and I'm sure it's free on his channel too as well. So if you need the Asian boxes, they have multiple indicators everywhere of this. It's just this one's I think it's a custom indicator that we have. So that's what I'm talking about, guys, is focusing on these high probability setups. And these are this was a high probability setup. High probability setup. Well, I'd say about 70% on that one. The USD CAD trade, high probability setup. Okay. GU trade. This was about a 70% because you're really at the low trying to catch the reversal. But we were right. You know what I'm saying? You gotta risk it to get the biscuit.
I was just gonna say, speaking of biscuits, man, I'm ready for some biscuits and gravy. Let's go. Let's go.
Oh, yeah.
That was good stuff. Good stuff, man. So those 4 trades right there, guys, monster scalps, obviously. Usually scalps are like 1-to-1s, quick 2-to-1s. So that's why we didn't really talk about scalping. We talked about intraday trading, you know, because a lot of people think scalping is, you know, gambling or whatever. And you can see just from the setups he showed you, those are trades we actually took, that we won, you know, that we gobbled up some serious pips, right? We got the biscuit and we got some gravy on those trades. So, man, Hunter, good stuff, good stuff. Hey guys, real fast. We are going to be doing a 1-day, just not even a 1-day. It's going to be, we haven't decided if it's going to be 4 hours or 5 hours. We might make it 5 hours so we can do a lunch in the middle there, like an hour lunch. So it'll probably end up being about 4 hours worth of training roughly, but about a 5-hour workshop next week. So we're looking at either Wednesday or Friday. It depends on the demand we get for it, because we've been getting a bunch of people asking us, hey, do you ever just do like little like workshops? Well, we're going to do it. It's going to be $99. Cool thing about it is you like it, you want to trade with us, we'll allow you to apply the $99 towards our academy. And then you can trade with us every day live, where we have just a lifetime license. You just buy it one time, you're done. And it's not like, you know, give away your kid and your kid to be named later. Our academy is $297 one time, guys. So, however, the workshop It gives you a chance for us to go and do this, but we'll break down each thing that he just talked about in there. Like he's talking about a lot of different little things in there. We're going to break down each of those things. So we're going to break down, you know, the trend bias or our directional bias. We're going to break down where liquidity is at, imbalances. We're going to talk about timing, and then of course patterns. Ultimately, our entry patterns that we're looking for, and then we'll sprinkle in other stuff as well, some risk management and everything to, you know, where you should set stop losses, all that kind of stuff. However, those will be like the 5 core things that we're going to do. So for those of you that are struggling a little bit in trading, great, this is perfect for you. For those of you that are new to trading, it's great. And if you really like it and really love it and want to spend some more time with us, we're going to allow you to take that $99 and apply it towards the $297. So it's pretty cool. It's a great way to go on a first date, have a cup of coffee with Hunter and I, or a bang if you like your bangs. Like I said, we're going to do it next week. We're going to probably start doing them like once a month. So it's a great way. Like I said, it's win-win for everybody. It won't break the bank, and you're going to get tons and tons and tons of value. So it'll end up being about a 5-hour workshop. Like I said, 4 hours of class time and about an hour for a lunch break. So without further ado, if you have questions, you can ask in the comments. You can leave a comment there saying you want more information. It's going to be simple to do it. We're not going to, I don't even think we're going to build a landing page for this yet. So we'll just do it. You pay, we'll send you the links when we schedule it and get it ready. You'll have access to it, and then we're good to go from there. Other than that, Hunter, am I missing anything? Oh, Telegram's in the description below. All right, so do that. If you're not following us on our other social medias, follow us there, please. We'd love that. And again, pound the like button if you like this. But that's enough sales for me. Hunter, I'm gonna let you take us home, brother.
Yeah, just you guys, you know, we're very grateful for, you know, almost hitting 500 subscribers. Very grateful. But yeah, just stick to these 5 things, guys. Your directional bias, liquidity, imbalance, timing, pattern, and you'll be fine. Right. So with that, you guys keep pipping and dipping. We'll see you soon. Peace.